All right. Welcome everyone to a Friday night live stream. All right, before I start, I gotta close my window here. Okay. Excuse me about that squeak on my window. But let's go ahead and wait at least 2 to 3 minutes here until people jump in. Hey, let's go. Okay, so let's go ahead and start. All right, so what an interesting end to the week. You guys already know, well, if you guys don't know, the market sold off really quickly at the end of today. And if you take a look at the weekly time frame, right? So let's go right straight into the charts here. On the weekly time frame, we're still making this weekly flag here, okay? However, for the past 4 weeks, including this week, right, we've been going straight down, right? Just been a constant movement to the downside, right? So here's kind of the main concept or theory that I go with. If you have 3 consecutive back-to-back red or green candlesticks to the downside or to the upside, that tends to be a very unhealthy trend. Okay, so 3 candlesticks back-to-back is somewhat okay, all right, but that's already unhealthy, all right. But when you have 3 or more consecutive back-to-back red or green candlesticks. So in this case, we have 4 red candlesticks, right? This is a very unhealthy downtrend, all right? We need to see at least 1 week of green, right, before we can start another leg downward with momentum. I hope that makes sense, right? And you know, we obviously wouldn't want any type of choppiness like this, right? However, for the fact that we have actually green weeks here, right? Green weekly candlesticks in between the red candlesticks as we're going down. This is usually a sign of a very healthy downtrend. If you take a look at this current uptrend that we have here, right? Well, not the current, excuse me, the past uptrend. We had a very healthy uptrend, right? As these weekly candlesticks were giving out really good back-to-back red and green weekly candlesticks. Right? Hey, Dion, what's up? Welcome. Good evening. So, Dion, I don't know if you missed this or not, but I'm currently talking about the kind of a concept or theory where if we have 3 or more back-to-back consecutive red or green candlesticks, that tends to be a very unhealthy trend. Okay, especially when we have 4 candlesticks back to back that are red. Okay, Dion. So I'm not saying that we're gonna have a green week next week, but in order for us to actually continue with a healthier downtrend than this, right, we need to see at least 1 week of an uptrend. All right, like I said before, the previous downtrend that we had before we flushed again was right here, right, where we made that first initial breakout to the downside on this ascending channel chart pattern, right? And with this leg down, this was a very healthy downtrend, even though it was very choppy, right? How do we know it's very choppy? Well, just based off of this weekly time frame and off of these weekly candlesticks, right, and their wicks, it was very choppy. However, it was a very healthy downtrend, right? And usually in the downtrend, right, when we have a healthy downtrend, we tend to have these big bounces, which we saw a couple of weeks ago, well, last month. Okay, so if we were to continue this downtrend, all right, and so far we have been, I need to see a bounce next week and at least another green week in order to have a healthier downtrend to the downside, right? But so far, right now, I've been comparing the downside and the upside, and the reason why we kept on going higher and higher and higher was obviously due to the buy the dip strategy, right? But at the same time, it was a very good uptrend here, right? We are seeing some really healthy uptrends where we saw in between each green week, we saw red weeks, right? Where the market really didn't move much. And now we have some immense volatility coming in, and it kind of reminds me of the crash here as well, right? 2020 crash, even the 2018 to 2019 crash, except we have a lot more volatility compared to 2018, well, late 2018 to 2019 crash. Obviously 2020 was kind of like a black swan event where we just came back down hard, and obviously right now we're seeing a lot of volatility because we have a lot more retail influence going on in the markets right now, and there's a lot of institutional market movement as well. Okay, so I want you guys to look out for a very good bounce on SPY next week. There's a high chance that we can see one, especially as we're really in a nice demand area here, right? And this entire area from 400, okay, to around 418 to around 420 is a really good demand area. And if you were to, see some actual good movement to the downside, I want us to have a nice green week and then head back down to 400. Okay, but since we are having an increase in selling volume, right, on this weekly time frame, and we're seeing a huge momentum to the downside, right, I also wouldn't be surprised if we retest 400 first and then bounce, right, and then we have our dire needed support bounce at 400. Okay, so if we go down to 400 first, we'll be very oversold, and it'll be a very unhealthy downtrend. Does that make sense? Okay, so I want you guys to prepare in the event that we do come back down to 400 first as well. Okay, because there's a good chance that can happen as well because of the fact that we have a lot of selling going on, a big shot in selling volume. Okay, and just the fact that we continuously reject every single resistance that we retest when we try to come back upwards, right? And remember, last week, we saw the price going back up to 450 and retest 450 and then immediately reject to the downside. I mean, we're 1 cent away from 450. Well, we were 1 cent above 450, excuse me. And the high of the week last week was 450.01. So it rejected so well off of 450, and we came crashing back down to end the week. Okay. All right. So some of the names that I want you guys to be looking out for is Zen, Z-E-N. All right. So Z-E-N or Zendesk has been incredibly strong here. During this entire market route. I mean, if I take a look at the weekly time frame here, right? This looks nothing. This is nothing like the current markets that we're looking at right now on the weekly time frame, right? The overall markets has been shooting downward while Zen over here has been, well, making higher highs and higher lows, right? It's still in the uptrend, right? If I were to convert this to a line chart here, right, we just been going straight up, okay? And obviously we're seeing a nice descending level of resistance, where the price is seeing some type of compression from the sellers here. So if we were to be optimistic, right, because of the fact that we have such good relative strength, since this is a RSS or a relative strength stock, there's a good chance that we can keep on pushing up higher above 125.20, which is why I have this right here, long over 125.20, and eventually come back above to the 130s and eventually 136, which is my final price target for this name if we do get an entry at 125.20. All right. And then the last name that I want to really go over with you guys, or second to last name, excuse me. This is PSX, or Phillips 66. All right, this is a crucial and very prominent player in the oil and overall oil and chemical industry here. And obviously, it's an energy name. They work a lot with other oil companies and other energy companies, and it's basically just a crucial component as a company as a whole in the oil industry, right? And PSX had reported amazing earnings beat and revenues beat as well, and they are looking to swing to profits this quarter as well, and they're restarting their share buyback program as well, which is valued at around 2.5 billion as well. So it seems very bullish just based off of those fundamental metrics and just based off the technical charts, right? This is a nice ascending triangle chart pattern, right? Ascending triangle chart pattern. And if you guys don't remember what that chart pattern is, it's a bullish chart pattern, not a bearish, right? Because we're getting higher lows and higher highs as we're forming the ascending triangle chart pattern. And as we're starting to conform to this ascending support trend line of this chart pattern, the price range will eventually get tighter and tighter and tighter as we're getting closer to the converging point, right, of this ascending support trend line to any of the major levels of resistances that we have right here, right? So first of all, our major level of resistance is sitting here at around 88 to around 88.50, and then the next level of resistance will be 91.50, right? So with PSX here, I'm looking for another 3 to 4 weeks of consolidation, and then eventually a nice breakout above 91.50 back to the hundreds. Okay, so PSX is showing an incredible amount of strength in this market route and volatility, and this is also another stock that you guys have to add onto your RSS list, right? Your relative strength stock list. And then the last one is the last name that I'll be giving you guys here is, right, Snow. Okay, so Snow is what I gave my CFO Single Watch members to trade today. And we got in around this candlestick right here, right? So I don't know where my members personally got their entries, but I'm pretty sure they at least got in between these three candlesticks, right? And we already had a nearly, well, I guess I would say 5+ point move so far, and we've broken to the downside below this 172.50-ish support level. And on the daily time frame, right, we're looking at a nice bear flag here, textbook bear flag, right? Here is the flagpole, and here is our flag, right? So this is a nice textbook bear flag. And if we have fall through next week, especially if we also have help from the overall tech sector, as the tech sector has been very weak this entire week, we can see further downside movement on snow and eventually reach around 160 to around 150, which is my next kind of a bottom range or bottoming range that I expect the price to form. And if we do kind of bounce around 150, 155, or 160, I want the price to start basing again. Okay, but so far, very, very bearish candlestick here. We ended up as a nice bearish engulfing candlestick as well, as this candlestick today completely encompasses or engulfs the previous candlestick that you see right here. Okay. So those are the three names that I really want you guys to be looking at for this for next week. And like I said, the markets are very volatile right now. So if you guys, want to hedge, make sure you guys hedge. I recommend UVXY calls. I recommend SPY puts. I recommend SQQ calls. Okay, there's multiple ways and multiple instruments out there in the market that you can really use to hedge against your portfolio or whatever positions that you may have to alongside, right? But so far, every single time the market has bounced, we tend to reject any type of resistance that we need to get over in order to reverse the downtrend that we've been making so far. So with all these rejections, we're getting even more confirmation week after week that this downtrend is here to stay. And one final technical analysis here that I have for you all is, since I'm talking about multiple here, are my SMAs, my simple moving averages, right? And for the last 2 weeks, including this week, we got our first cross downward of the 10 SMA on the 50, okay? And for the fact that the 21 SMA now is also curving downward, this is telling me that there is further downside movement ahead in the short term and the long term, because we have the 50 SMA also starting to curl as well. So what I would expect the 50 SMA to do, right, is start to kind of move horizontally for a short while, maybe 2 to 3 weeks, and then eventually start curving downward like this and acting as a level of resistance against the price. Okay, so far, the 10 SMA has been acting as a level of resistance, even though it tried to act as a level of support whenever we tried to reverse and come back to the upside and eventually hit all-time high prices again. Okay, but overall, okay, market volatility is here, so make sure you guys hedge for next week, all right? And I bid you guys good luck again. It's a very hard market to trade, right? But don't worry, right? We're still in a nice demand area, which is why I also think that there's a good chance that we can bounce as well, right? But the further, more convincing argument that I told you guys was, well, we have 4 consecutive back-to-back red weekly candlesticks here, right? And so we need to see at least 1 green candlestick or 1 green week, all right, before we need to go back to the downside. All right, so I'm here for it, right? I'm here for the downside. All right, I'm not saying that we're going to reverse right away and touch this descending level of resistance again in the next few weeks. I'm just saying that we need to see a healthier downtrend, and in order to see a healthier downtrend, we need to bounce. And there's a good possibility that we can bounce because of the fact that we ended at a very decent, a pretty good demand area right here between 400 to around 418 to around 420. All right, so we have a resistance range around 418 to 420, and then a nice solid area of support at $400 flat. All right, so that whole number 400 is being looked upon by many retail traders, and I'm pretty sure the institutions are looking to get in around 400 as well, and to really get into some nice discounted names as well if the market tanks back down to 400. Okay, so that is it for tonight, guys. Thank you all for joining on this very short live, but hopefully I have helped you guys prepare for next week, and hopefully you guys can join the CFO Swing and Watch newsletter and join our private CFO Discord. Thank you all for joining, and have a great rest of your night. I'll see you guys all on Monday.